how to join a break of structure or a continuous trend before it happens. Now, the first thing you need to do is put the volume profile on a certain price range, right? And what you're going to see is something like this for today's example, price of March 20th, right? So we put the volume profile, and now after we do that, we mark our levels. Notice how we're not cheating, and we're using the volume profile from 8 a.m. to 11:05 a.m. And this is way before this 90 point movement happened, right? So how to join this trend? So after we put this, we mark out our levels. The first level that we're going to mark out is this big gap right here, right? That's the first level that we're going to mark. The second level that we're going to mark is right under that, is this bump right here, right? Why this bump? Is because this bump is going to let us know that there was a lot of selling, big trades happening, right? How do I know that? Because there was a lot of volume being put. It's like a peak, like a mountain. There was a lot of volume, and I'll show you what that looks like right after. Now, after this, the third level that we're going to look at is right under that also. This gap right here, this whole area was a key example of how to catch this trade before it really happened. Now, we're going to do the same thing. This is another gap that we're going to use a gap of volume, right? And notice how price is really aligning. The reason why I marked this middle price right here, this peak, is that when we're going to go to bid and ask volume, we see that, we see that right here, there was a lot of volume. Most of the volume when it came to this candle was right here in the middle. And now we know that when price reaches this area, this is a seller zone, right? Seller zone. Big trades of selling happen in this zone, right? And now talking about the gaps, right? There was a lack of gaps. There was an imbalance of volume in this area. So when price reaches this area, right, it's most likely going to reject it, right? Because we have a volume, we have a selling zone right here, and price literally touched this zone and it went down and made a big chunk of volume footprint right here. So what we're going to do with that is this is going to be our entry next time price touches this area. So we're going to mark it the middle of the volume, right? All the way to here. And next time price touches the middle of the volume of this candle, we're expecting a continuous downtrend. So we go back to the normal candlesticks, and as you see, price literally touched this level and went down. Touched the level again, and that's how you catch a 90-point move. Of course, it may not ever be 90 points exactly, but this is how you join a trend using order flow before it really happens. See you guys later.